The green transition, an echo promise or a global setback? Now, for years, we've been hearing about this push to renewable everything. We're electrifying everything. We're electrifying vehicles, electric vehicles, EVs. We're electrifying home appliances. All the electrical generation is supposed to come from renewable sources like solar panels and windmills, which sounds great, right? Until you realize it's about as realistic as catching a leprechaun and having them lead you to a pot of gold, which is not very likely. Now, the reality of this was always going to be a factor. I've said this many times until reality hits you in the face. But now, with the Fed hiking rates, debt piling high, and a recession looming, we're starting to see the cracks everywhere in this push to renewables. The dam is crashing, and over just the last couple of weeks, more and more data is piling in showing just how bad this is. So, on today's show, we're going to cover the much celebrated green transition, hailed as, the earth-saving grace. But under closer inspection, we're going to see a massive amount of economic drawbacks, environmental paradoxes, and other things. We're going to see that the global push to adopt cleaner energy solutions it brings an underreported narrative of failed infrastructure projects, slowed EV sales, and policies starting to fall apart. We're going to look at why there was this relentless drive, why there was this push, who stands to gain the most, and we're going to look through the interests behind the green curtain. And we're going to give you strategies that you can use to protect yourself, to arm yourself amidst this green chaos. Now, it starts with the rise and stall of electric vehicles. Of course, you know about this, the EV push. We've been hearing about it in California. The EV push has been big, but it's not just California, it's the United States and it's other nations that have all been pushing for a move to electric vehicles, and not just pushing for a move to it, but as a matter of fact, mandating. This is a very key piece we're going to come back to over and over throughout this segment. Mandating the switch to electric vehicles. Certain goals by 2030, by 2035. But the problem is the market doesn't work like that. You can't just will things into existence. There has to be demand. And that is exactly the problem that we have in the EV space. There's no demand. Sales are slow. As a matter of fact, Ford said that customers in North America are unwilling to pay a premium for the EV vehicles. So Ford's electric vehicle push is falling apart. The company is now postponing $12 billion in electric vehicle manufacturing investment. The CFO, John Lawler, said that Ford will postpone about $12 billion in spending on manufacturing capacity for EVs, including a planned second battery plant in Kentucky. So this isn't just like things are bad, sales are bad. This is, no, we're cutting spending on future production, all right? So these are leading indicators that tell us where the future is going. So either we're going to have, both probably, much less electric vehicles in the future because Ford's cutting back on future development, and we're going to have higher prices. Less supply. Now that unless the demand completely falls off the cliff. We saw Ford's Model EV, their unit lost about $3.1 billion through 3 quarters this year in 2023. You can't just lose $3 billion in a year. The full year operating loss is $4.5 billion for Ford's e-business, the EV unit. You can't just lose $4.5 billion. It doesn't work like that. The markets don't support that. As part of the third quarter report, we see Ford said on Thursday that its EV business, called Ford Model E, lost all this money, all right? And it's double the loss from a year ago. Now, this is despite they had a 26% increase in revenue, but they lost double the amount that they lost last year. And it's not just Ford. General Motors is the same thing. In a Q3 letter to shareholders published on Tuesday, GM CEO Mary Barra said that the automaker would be changing course. What does that mean? Changing course. Changing course from what? Changing course from this push to electric vehicles. They had a previous goal to build 400,000 electric vehicles by mid-2024, by mid-next year. And that's what they're changing direction on. They're no longer going to project to do that. They're no longer going to try to do that because they've been having the same setbacks as Ford. They're losing massive amounts of money and they're finding themselves unable to be able to meet those goals. GM's delayed the Silverado EV for another year due to, surprise, surprise, shrinking demand and engineering challenges. Some of the engineering challenges are like, how the heck do we get all the materials that we need to build these things? They're just not available in the world. GM says that demand is so down, in fact, that it's diverting 1,000 employees from its Orion assembly plant in Michigan, which is currently being retooled for EV production, to other Michigan assembly facilities. So they're currently trying to build out these EV facilities, and now they're just going to move everyone over. And it's not just Ford, it's not just GM. Mercedes-Benz, their shares, price of their stock fell nearly 6% because their profits fell. Why did their profits fall? The same thing. The CFO said that brutal, quote, brutal EV pricing caused their profits to fall. So we saw their shares fall Thursday. It reported lower profits, lower revenue, and highlighted pricing challenges in the EV space specifically. It's a bloodbath everywhere. The CFO was quoted as saying, quote, pretty brutal space. That's what he said. And the point is that there is no demand. And the reason why there's no demand is nobody wants to pay these astronomical prices. And the other problem is they just don't work. We saw recently, it was, I think, the president of Ford went on a road trip and the report was like, wow, we can't really charge these things. We're going to get back to the charging thing in a minute. But what we can see is that these companies are losing money left and right, left and right, left and right. Now, part of the reason why they've been able to work is because of the taxpayers are bankrolling these EVs. So that means I don't own an EV vehicle. Well, I own a golf cart, but I don't own an actual, my main cars are combustion engine. I don't own an EV vehicle, and you might not either. But regardless, you're paying for it. You're paying for it because taxpayers are the ones bailing them out. Ford and GM, like I said, are slowing their production down, but the governments still spend billions of dollars in incentives. So it's the incentives that you're paying for through this. As a matter of fact, we can see, we're going to talk about the incentives and how much there were, but earlier this year, the EPA, Environmental Protection Agency, part of what's driving this, put out new rules that would require as many as 2 of every 3 vehicles sold in the U.S. by 2032 to be electric. But nobody wants them. Nobody can afford them. The governments are running out of money. We talk about, we'll talk later about some of the deficits that the government is, but right now we're spending, as of last quarter, we had to borrow an extra $1 trillion just in borrowing for the quarter. That's how upside down the government budget is, but yet they're spending billions of dollars to bend, to change, to will into existence both the supply chain, but more importantly, the demand curves. They're trying to build the demand, but it's just not there. The Biden administration's Inflation Reduction Act, the IRA, which is supposed to lower inflation by spending a bunch of money, put in a $7,500 tax credit for the purchase of electric vehicles, but yet nobody is still buying them. Millions of dollars, billions of dollars of incentives, and it's all falling apart. Now, the math is astonishing. It just will not work